How's it going, everybody? Welcome to the Hot Corner Live Strategy Session. I'm your host, Steve Strazza. I'm the Director of Research here at All Star Charts. And as you know, we do this every Wednesday. We get together at 1 o'clock, middle of the week. We go over some macro themes, right, to kick off the call. And then we dive into, the latest insider activity and the charts that we want to be buying that have experienced insider activity. We got a lot to talk about today, so let's get right to it. Nothing we discuss here constitutes any solicitation to buy or sell any security. This is solely for informational purposes, not to be construed as investment advice. What is it? This is a performance chart since March. Looking back more than 2 months now. Are we in a market where the indexes are up 10% in that time? Or are we in a market where banks are down roughly 40%, right? The S&P 500 was up 7% in the fourth quarter of last year, another 7% in the first quarter of this year. And it's pressing on its highest level since August. Banks are at multi-year lows. Right? So think about that. We often say you can't have a bull market without the banks. Are we? Is that something we maybe shouldn't say anymore? These are the things I'm starting to think about. And I wanted to show this chart basically to provide context for my next point, which is that whenever the market isn't doing what it's supposed to be doing or should be doing, right? By that, I mean, banks are blowing up, banks are failing. We're having bank runs in California every weekend. Broader market's got to come under pressure, right? That's strange. So make sure you're asking the right questions whenever the market's doing something, that maybe doesn't make sense or that you don't think is sustainable, whenever there's some sort of divergence that has to clean itself up. And you're wondering, okay, which one's right here? Is NASDAQ right or are banks right? So we could ask two questions about this divergence here, right? Tech stocks, growth stocks making new highs look great. XLK is literally making new 52-week highs. Continue to see mega caps break out. Meanwhile, financials, albeit they're holding on at the index level, the sector index level, right? I'm talking about XLF. Banks just look terrible. And even today, the banking indexes today, look, here's KRE down almost 2%. Meanwhile, tech is up almost 1%. Just keeps happening, right? These groups are literally moving in opposite directions. How long can it last? So we can look at it one of two ways. Banks keep blowing up. The broader market has to come under pressure, right? Got to be cautious here. Broader market's got to sell off, catch down to these banks. Stocks can't keep making new highs in an environment where the financial sector is, going through what it is. That's one way to look at it. And it's not wrong. History has proven to us time and time again that we really, really want financials and particularly banks to participate. We're going to trust any bull market. Maybe this time's different. The other way to look at this is, how impressive is it that tech and growth, and it's more than tech and growth, we're going to get to that in a minute. How impressive is it that all these stocks and groups continue to chug higher and make new highs despite all these bank failures, right? If, God forbid, banks just stop blowing up and the Fed, takes its foot off the gas just a little bit, lets these guys breathe, cuts rates a bit, the value of their bond portfolios will shoot up, right? And they'll take care of a lot of those unrealized losses, which is what's making these companies fold so fast. So how impressive is it? How remarkable is it that the market keeps pressing higher? We have 3 of the 4 largest bank failures of all time the past 2 months. NASDAQ's making new highs today. Are you familiar with the beach ball effect, right? So the beach ball effect is basically, it says that what it means is that when there's a headwind present in the market, right, it's like holding a beach ball underwater. There's some sort of headwind in place. And if stocks can remain buoyant or resilient through that headwind, when that headwind eventually, ebbs or fades away, it's no longer in the picture, beach ball is going to shoot up, right? Hold a beach ball underwater, let go. That's the idea here. So that's another way to look at it is, my God, what incredible strength from the broader market, despite what's going on. And both are right, but you don't want to make the mistake of only thinking about the first point. So it's really been a growth versus value story all year, and it continues to be growth, right? And it's not just the banks, it's not just the financials. This is showing the year-to-date return. Anything on the left side of the y-axis here is negative on the year. Anything on the right side is positive. Here's all your growth stuff and your Bitcoin. Here's your banks, but also, a lot of energy stuff and some metals mixed in, right? It's really cyclical groups. So let's talk about some of these positives, because I know I've been coming on here for the past few weeks and talking about how, cautious we need to be because of the banks. The more and more I say that, and the longer that the broader market holds up for, the more I'm sitting here and thinking, okay, maybe we can be a little less cautious, right? So here's tech resolving higher from a bearish to bullish reversal pattern. I think once we take out these August highs here, and look, we've chopped here for a little while. This is a nice little bullish continuation pattern right here at the upper bounds. Once we resolve higher, path of least resistance is up. New uptrend underway. Look at how these 200-day moving averages have flattened and started curling higher. Flattened. Looks like XLC is going to start curling higher soon. Call to head and shoulders. That's fine. Again, it's just a textbook bearish to bullish reversal. Nice base, rounding bottom. We take out these pivot highs. Again, you have those August highs there. Decisive move above this level. A clear upside resolution from this base. Path of least resistance is higher. Mega cap tech has just been so good, right? Everybody knows what NVIDIA is doing, what Apple's doing. Microsoft resolving higher from these bases, making new highs. I think Google's next, right? Meta's another one. Geez, Facebook's, I think, the best performer this year. So Google resolving higher from base. Add it to the list of bullish, rounding bottoms that have resolved higher. Reversals that have been completed. This is now going to join that list, I think. It's making new highs today. And we were just really, with this bubble chart, we were trying to illustrate that growth versus value story, right? But be very careful. It's not just growth. It's not just tech that's working today. There are some, what I like to call economy stocks, right? A lot of consumer facing stuff. But even home builders. And this is a cyclical group. This is cyclical like banks. A performance chart of these two would be interesting, because they typically move together, but they've been moving in opposite directions for more than 2 months now. So home builders up 60% since the bottom last year, less than 10% from new all-time highs. Not tech. Gaming. It's Vegas. Vegas, baby. It's casinos. It's your Caesars, your Las Vegas Sands, your Wynn. Probably got some DraftKings, maybe some Penn in there, right? Churchill Downs stock is making new all-time highs, pretty sure. Horse track. That's what I mean by economy stock, right? Not bearish at all. Fast food restaurants making new all-time highs. And you could say to me, hey, staple stocks are making new highs too, right? And they're defensive. That's fine. Yeah, that's true. But don't ignore the offensive ones. It's all very bullish. Let's do one more. Medical devices, right? We are seeing more and more of these patterns resolve higher at the index level and at the individual stock level, right? We go from downtrend to sideways trend or base, new uptrend. So this is another one, like Google, that's joining that list, like casinos joining that list. All right, so what's the line in the sand? When do we have to kind of change our tune and become more cautious? Maybe even bearish. XLF 3050. Still above there. Did not like the price action from the equal weight financials ETF last week. Down again today. That's RYF, something to watch. Sorry, did not bring that chart along. But that whole theme of watching financials or watching small caps, right, which are very heavy financials, very similar trade there, is that there's always information in the laggards. There's information in the worst groups. If a period of elevated selling pressure is upon us, the weakest groups will break first. And they'll give you that information, right? That look out. So what does that look like? The weakest groups telling us maybe it's appropriate, take a more cautious approach. 170 in the Russell, you could even say as low as these pivot lows here from last summer and fall, call it 163. It's really a zone. It's a big range there. If that level goes, no good. Along the same lines, the same theme, everyone is aware by now that this is a mega cap dominated market, 2023. The micro caps look even worse than the small caps. These are the smallest, most speculative issues in the market. This is the Russell Microcap Index. What a key psychological level here at 100, maybe just above 100. Also the pre-COVID highs from 2020. You got the pivot lows lining up right there. Test. Another test. Maybe this is a bull hook, a scoop and score, bear trap, right? We scoop just below 100, undercut the pivot lows from, just last month. Look at momentum, really diverged positively, right? Price making new lows, momentum making higher lows. Maybe we scoop and score here above 100. Maybe get a move. I'll be watching this one really closely, right? Because if this starts, ripping higher, XLF and IWM are holding their levels and rebounding off of them, right? All right, let's start with Google. Since we've already mentioned it, got to outline a trade on this one. When you look at what Microsoft has done and what Apple has done and what Meta has done, I think there's a catch-up trade here in Google. I think it's a great company. I think it's also, the cheapest of that group, right? You value people. So 110 is that level. 110 to 125 for now, but I think eventually, as more and more of these mega cap growth leaders look like they're heading back to new all-time highs, I'll get more and more comfortable with this 150 price target for Google. That's probably where we'll be headed. I'm talking about like the Nvidias of the world that are just in close range of their all-time highs already. Excuse me. Like I said, we got fast food restaurants making new highs. Even Chipotle. That's CMG. We had a director buy shares about this time last year. Look, this is, when you zoom out on this chart, it's as pretty as they come. This has been a secular leader for a long time now. It goes on big runs. It bases out for prolonged periods, and it goes on another big run. This is just the latest base here for Chipotle. These, this gap up here on earnings a few weeks ago marked new all-time highs, right? And now we're just coiling in a really high and tight bull pennant, bull flag, whatever, short-term continuation pattern right here. Target 2430 in Chipotle, long above those 2021 highs of 1960. Nuvalent, NUVL. I got to be honest, I have no idea what these guys do. So let's check. This is a new one, another new one. Clinical stage biopharma. Cool. Cancer. Nuvalent. Not many biotechs making new all-time highs. This one is. Relatively new issue too. Nuvalent came public in the summer of 2021. Above 40.50, we're long with a target just north of 61. That's Fairmount Funds Management. They have a passive stake of over 5%. filed last November. Aon. This is a big insurance name. New all-time highs. Hey, not many financials are making new all-time highs these days. Aon is right there. These are the old all-time highs from this time last year. 336, that marks the breakout. We want to be long with a target of 391. Another new one. This is new holdings. We got Nuvalent, new, all new ideas. Digital banking services. Uh-oh. $27 billion market cap. How have I not heard of these guys? So that's New Holdings, NU. Where are they based out of? Not here. Cayman Islands. So that could mean anything. So Tommy Tuberville, this guy gets good information, I think. He's always on new trends. I love that he's buying this base breakout here. Yeah, he was a little bit early. He was buying it back here in November. But look, this base needed more time. Now it's completing. Again, you see that 200-day flattening, curling higher. 560 is the level. If we're above there, the base is in. Again, notice the theme here when I'm talking about bases, August highs, right? And, we continue to see more and more and more of these resolve higher. A lot of examples here today. So 560, long towards 885. That's new. Uber. I like this one a lot. They just had a great earnings report. I really, really like their CEO. He was the insider in this name from this time last year. Really bought the lows, it looks like. Yeah, so he was a buyer last May 9th. Wow. He was buying the stock right here. So this is why we do this. This is why we pay attention. Pretty much bought the bottom in his own stock. And for a rather significant amount. Good for him. Over $5 million. He's just, I'm a nerd for a good CEO or a good leader. I used to spend a lot of time listening to earnings calls. I started my career as an auditor where you're really just, interacting with the accountants and the executives asking for information. Kind of like, you have a similar job as like the analysts on these earnings calls, right? Where you're asking for information or what's behind this number? Can I have support for this? Or, what's your forecast on that? We have different objectives, analysts and auditors, but we're both, in the business of getting information directly from the company for different reasons. So anyway, I like to, pay attention to this kind of stuff. And there's nothing better than a good CEO, especially running a new and exciting growth company like an Uber. And I think he's doing a great job. Their most recent earnings report was so impressive. And that's what you're seeing here. You got this huge gap up above our risk level, about 33 on earnings. We're kind of in the middle of the range here. So if you're not long already, weakness back towards 33 or buy strength above this 44.75 level. And then long-term target 64. DraftKings. Again, look at the bases. The growth stocks or the tech stocks that we want to be buying all look like this. They should all look the same. You want to buy the resolution or the completion of these reversal patterns. Why? Because the completion of a reversal pattern tells you the trend is no longer lower or sideways. It's now higher. And you want to buy uptrends. That's it. 21, target 34.50. I really like DraftKings. I went to the Heat-Knicks game this weekend. You're not allowed to bet on sports in Florida, though. I'm sure there's a way. I don't care that much. Meta platforms continues to work, just as an example. Why do we buy these bases? Because this is what they tend to look like after we buy them. We got into Meta around 200, it's trading around 233 today. So resilient. NVIDIA, look at this base. Base would have got you into NVIDIA at 195. 285 today. Not trying to buy the bottom. Let the insiders do that. That's why we keep these stocks on our list. We're not trying to buy the bottom. That's a tough game. I don't want to play that game. Let the insiders play that game. They have better information than me. And frankly, sometimes they're wrong. Look at a chart of Twilio. Their CEO bought like $10 million worth of stock following last quarter's earnings. And he's very much underwater today. let the chart prove the insiders right, then get long. NVIDIA, we would have bought this base at 195, get long again at 250. Now we got this bullish continuation pattern. NVIDIA is going to be at new all-time highs before we know it. That's just amazing. Duolingo, speaking of awesome earnings reports, these guys are killing it. I don't know it. I know it's a language learning, I think, mobile app. Sounds like a hip new Rosetta Stone. I don't know. Durable Capital has been, just a huge insider in this name for a long time now. And boy, have they been right. They did their homework, right? So we were in above 115, hit target 140, checked back. Just a nice, clean textbook retest. Back towards the target. Let's get long above 140, target of 205. Notice the pattern again. Buy the base. Skechers, new shoes. I'm still a Nike guy. I just got my Nike order last week. Very cool. I have fat feet though. Some of their shoes they're too thin for me. I ordered 2 pairs of golf shoes just to hedge for that risk. And it was good that I did, because the fancier ones that I got, I knew it. I was reading the reviews. Too thin. My feet were throbbing. So I'm not on Skechers yet, but I look forward to it. One day I will be. Look forward to being able to Velcro my shoes some point in the future. And look, they're winning. It's a bull market for Skechers. 54.40, target 77.50. President inside buyer last year. Almost 4 million. All right, we're in the Buffett zone. Got to talk about Occidental before we go. I won't keep you guys much longer. So everybody should know this chart by now. I'm going to pull up the YouTube. So if you guys have any questions, get them in there now. Listen, we've seen it before. Oxy comes down here. Hold on. Yeah. So Oxy checks in to this upper 50s, low 60 range, and we get 4 and 4s from Berkshire. Stock's getting killed again today. Really threatening almost new 52-week lows. Be close. Down another 3.5% today. Energy looks really vulnerable, guys. Continue to not love energy, really. So Occidental has been our vehicle. Hasn't exactly worked, but it hasn't not worked. Right? Never hit our price target. Keeps shaping up this, what certainly looks to be a distribution pattern to me, right? But who am I to argue Warren Buffett continues to step in and support the stock at the neckline here? All right. So as long as this top doesn't complete, we can keep buying it, right? Tops fail all the time and turn into continuation patterns. Wouldn't be the first time we see it. In fact, by definition, reversal patterns don't resolve in the direction of the underlying trend. So for that reason, they are less likely to resolve and reverse the trend, right? Trends persist. So reversal patterns are far less reliable than a continuation pattern. That's why they fail so often. So do we want to bet on this thing failing? If we are going to bet on this thing failing, we've got to be really careful here. We haven't wanted to be long below 60, really 57.50 has been our level. I would tell you, hey, okay, if you really want to get aggressive here, 56, but nothing below there. This starts to look more and more like a completed top, which is not something we would want to buy. How will we know if and when it is a completed top? 3 clues for you guys. These are the things that will be happening. See momentum here? Hasn't hit oversold condition since, oh my good Lord, since like August of 2021. Almost 2 years. Stock has not been oversold. That is definitely a characteristic of a bull market or a strong uptrend. So you will see this get oversold. Daily RSI 14 will be below 30. Flirting with it right now, about 3.5 points away. And these 2 tops will also complete. This is the relative trend for Occidental, right? This is Oxy versus the S&P in the upper pane and Oxy versus XLE in the lower pane. The relative trend is always excellent information, right? Great supporting data. oftentimes leading data. Sometimes coincident, sometimes lag. You don't really know. But when I look at the absolute chart and I see a top forming, and I look at the relative charts and I see tops, these are all going to resolve in the same direction, right? They're either going to be tops or they're not going to be tops. So if you start to see these relative trends lead and resolve lower from these tops, whether it's relative to the S&P or relative to energy, that's pretty, that'll be a great leading signal that this is also going to be a top. All right. That's the TA 101 for the day. Guys, questions, concerns, say hello. info@allstarcharts.com. Hit us up. Let us know what you think. Let us know if you're buying these bases. Let us know who's right, banks or tech stocks. Well, let me check the chat before I go. Joe, what does the breakdown in XLE suggest? I don't want to call it a breakdown yet. Joe, I was kicking myself last year because I turned bearish on energy. I was too early. I was antsy about it. It was too soon, right? I turned bearish when I should have turned, neutral. Because we were so bullish energy for so long. The trend was clearly losing steam last year. And I started to think, okay, you're going to get a rollover here. When really we just got sideways, dead action. So I don't want to get too bearish on energy yet. Let's let these tops complete. For XLE or even crude oil, it's those 2018 highs. So for XLE, 2018 highs come in right around 78. Just zoom out on these charts. I wish I had it. I would show you. And then crude oil, same thing. Watch those 2018 highs. If those levels go, warrants more caution. Also watch oil services, XES. They're going to take out these pivot lows and this pattern, this short-term head and shoulders top is going to complete. Right. But I don't think we can make that call yet. Charts like Oxy will resolve lower, right? Those tops will complete. That's how we'll know. So you said CVX seems top heavy and cannot get out of the range. Yeah. A lot of energy. I mean, you said that about CVX. I could say the same about Occidental, right? Top has been forming for a long time now. But again, don't jump the gun. Just like we don't want to buy this base until it completes, right? We don't want to sell this top until it completes. Get that confirmation. I gave you 3 ways that you'll know with Occidental, right? And guess what? If Oxy's a top, Chevron's probably a top. A lot of them are tops. XLE's breaking 78, right? All happening together. Okay, the stock market seems to be not taking the Fed or economy seriously. Feels very disjointed. Yep, that's normal and it's fine. That's why we pay attention to price. So if you want to get an opinion that is, going to be based solely on the information that's actually taking place and what people are doing, where people are putting their money, supply and demand dynamic of markets, come here because that's always what we're going to be talking about as opposed to what the Fed is doing. Hey, Sam. Thoughts on XLP? Listen, I don't like it. I don't like the outperformance from Staples. It's been 3 months now. Steady outperformance from Staples. Not big time outperformance, but outperformance nonetheless. No, Sam, I would say you're probably looking at XLP SPY. So Sam's asking about the performance from Staples, which is concerning, right? Because Staples are a defensive group and they're leading. Pull up the equal weight ratio, Sam. So that's RHS, RSP. You got a clean shelf of resistance there around like this 124, 125 zone. If that resolves higher, then, that would be a warning sign, right? That's what I'm watching for Staples. All right, guys. Thanks so much. Thanks, everybody, for joining. As always, be right back here, same place, same time next week, 1 o'clock Wednesday. Everybody have a great day.